Good afternoon, and thank you for joining us today. My name is Chris Seiffert, and I am the Advisor Planning Specialist here at MSMF Wealth Management and the Missouri Regional Office with Cetera Financial Specialists. Wanted to take a few minutes today to give our clients of MSMF Wealth Management and Sonus Benefits some perspective on where we find ourselves here as we enter 2021. I've asked the partners of the firm, Tom Mengel, Tom Murphy, and Mark Finke, to join me today to share their thoughts and give some insights on some perspective as we enter a very pivotal year. So I would like to start with the senior partner of the firm, Tom Mengel. Tom, in light of some of the possible short-term policy initiatives of the Biden administration that have been thrown around, what are you currently recommending to your clients relative to their investment portfolios?
Thanks, Chris. Actually, not much change of in any way, shape, or form. The news media makes it out like this blue wave that we're having, this year has never happened before. If you look back historically at the election cycles, going back to 1993, you can see that we had a full blue wave then, and then again in 2009 with the Obama administration. But when you look at the performance of the markets, the 12 months following the inauguration, you can see that 6 out of 7 times the market performance was positive. The only time we had negative performance was in 2001. And if you recall, we had a pretty significant recession going on right then at the end of the dot-com boom, where markets were up 30+%. What's more important is to look at the performance of companies and the forecast for company earnings. And the forecast for corporate profits, as you can see here in 21 and 22, are very, very positive. We're just now seeing some of the fourth quarter numbers come in, and many of the companies that have reported so far are reporting very, very good fourth quarters. I just read a commentary that said the fourth quarter ended up with about 5.2% growth, which is pretty significant, and they're forecasting about 4% growth for the first quarter of 2021. All in all, it's earnings that will drive the marketplace, not political decisions or taxation policies. I think people forget how good and how smart corporate America really is. We made money when tax rates were 35%. They made a little bit more money when it was 20%. If corporate profits are taxed at 28%, companies will learn how to make money at 28% tax. That's just the way we do it. We adapt, we change, and we make things happen. So we feel very positive about the year coming forward.
That's great insight. Thank you so much, Tom. Moving over to the managing partner of the firm, Mark Finke. Mark, how are you preparing your clients for strategy and planning initiatives that might be appropriate in 2021?
Thanks, Chris. It's a great question. I think it dovetails well in with what Tom's talking about. Tom's indicating that, we've weathered this storm before, and there's a difference between long-term strategy and responding to short-term input. The small difference in terms of, overall strategies and planning initiatives that we might take is really going to be driven by 3 things that we're watching. First and foremost, it's going to be stimulus. The Biden administration has been very forthcoming that there's another stimulus package coming. And quite frankly, with some of the appointees from President Biden, you talk about, the Treasury Secretary, coming back around. She definitely wants a lot of stimulus. And you could see a stimulus package that's larger than the one that we saw in the summer. And, that it's going to be a spend to get the economy going. The challenge with that package is what's the provisions in there relative to any differences in your individual retirement accounts or concessions there. Also, any type of concessions or opportunities in your retirement plans. There also could be provisions relative to interest on student loan debt, as well as certainly provisions relative to your health insurance. Second key area we're going to look at really is regulatory. The Biden administration has indicated they are going to reenact a lot of the regulations that the Trump administration took off the books. Now, while that may have an impact on the economy one way or another, we don't know. But there are crosshairs very clearly on the banking system and the financial services system. And those regulations could impact strategies that we have on the books that might have to be tweaked looking forward. And lastly, probably the big kid on the block is tax reform. Tom alluded to that relative to portfolio management, but long-term financial strategies could be impacted with changes in the tax code. Again, the Biden administration has been very forthcoming that they want to undo the tax cuts that the Trump administration put in place. And this could be individual tax rates, this could be capital gains tax rates, dividends tax rates, estate taxes, as well as changes to how your salary deferrals at work are treated, literally changes in terms of how IRAs are treated, how 401ks are treated. All of these items could have 1, 2, 3, 4, 5 planning issues that we need to rebuild a strategy around for long term. Again, similar to what Tom talked about, we've navigated these waters before on both sides of the equation. We'll navigate them again, but it's wait and see and be prepared. And once we have the landscape, we'll know how to talk to all of our clients and individually assess how their strategies for their financial blueprints may need to change. Chris?
Thanks, Mark. And I think it ties in real well to, how Tom was explaining the approach towards client portfolios. So appreciate that insight. Finally, I'd like to turn it over to Tom Murphy, who runs Sonus Benefits, and get some perspective from our business clients. Some of the same policy initiatives that Mark has spoken to, as well as others, have a direct impact on our business clients. So Murph, what kind of guidance and perspective do you have for our business clients, given where we find ourselves here in 2021?
Well, thanks, Chris. I think Tom and Mark did a great job talking about on the investment side. And I guess it's a little bit too early to tell for sure, right? So Mark talked about the stimulus package that President-elect Biden, and he unveiled a little bit of it last week. There was several actions in there addressing healthcare access and affordability. I know there's been a lot of talk during the Trump administration about undoing Obamacare, and a lot of the components of what they call Obamacare are still going to remain in place. President-elect Biden's program is called the American Rescue Plan, and some components of that really around that would impact employers or employees on employer-sponsored plans, or subsidizing COBRA as an example, COBRA for terminated employees. They're talking about subsidizing as much as up to 100% of the cost of COBRA for some period of time. Expansion and increasing the premium tax credits, which really goes into providing the subsidies for those that buy off the marketplace or the exchange, which again, most call that Obamacare. This could impact current affordability limits under the company-sponsored plan, which goes into measurements and things like that from a reporting perspective. Talking about expansion of Medicare or Medicaid, and Medicare for that matter, maybe lowering the age for one to get Medicare. Unsure about the individual mandate, which went away under the Trump administration. My guess is that's going to come back. Many Americans didn't like it, so it may not come back. But again, the idea of just providing more access to people to have health care. While there's no really any clear indication on the impact of employer-sponsored plans, I guess what I would say is that we get a lot of calls on reporting the 1094, 1095s, and people thinking that went away. It didn't go away. It never went away. So, that's something that's going to stay out there for employers. Penalties for employers are not going away and didn't go away. And even as they struck down some of the other parts of the ACA, those didn't go away. The Biden campaign estimated by, again, their estimations, that the overall cost would more than double current marketplace spend. Well, the current marketplace spend, or again, Obamacare, is about $1.76 trillion. So if you think about doubling that number over the course of the next 10 years, that's going to have impact across the board, employer-sponsored plans, individuals, and the like. So that's going to be paid for somewhere. So again, it's a wait and see, Chris. We'll see what comes out as more things roll out. The one thing to be sure of, at Sonus Benefits, we're on top of it. We have a whole compliance team, and we'll make sure that we're getting that information out to all of our employer clients.
Thanks, Murph. That's great insight. I think it's pretty obvious that both our individual and business clients may be looking at some short-term strategy adjustment in response to both a changing regulatory and policy landscape. As you can hear from the partners' comments, we'll be watching any developments and working with all of you on your strategies moving forward. So with that, I'd like to thank Mark, Tom, and Murph for taking a few minutes of their day to come on and share this information with us. As always, if you have any questions and how it relates to your individual situation, please do not hesitate to reach out to Mark, Tom, or Murph, or their respective teams, and we're happy to have a conversation with you. With that, I'd like to thank you for joining us today, and thank you for the confidence you've shown in our firm over the years, and hope you all have a great week.